Welcome to another S&P 500 Trade Watch analysis. Today is October 9, 2022. The market appeared to finally have got the message that there will not be a Fed pivot anytime soon. And the Fed put is also dead. Fed will not come and rescue the market. In my opinion, I believe Jay Powell would love to see a casualty just to demonstrate his point that there is no longer a Fed put. So will we see some sort of breakage in October? I wouldn't rule anything out. After all, Halloween is coming. Trick or treat. So let's see where the SPY, QQQ, IWM, Apple, and Tesla might do in the coming week. Will they pass out early tweaks or will they spook the market? Stay tuned. And next week, there will be some market-moving economic reports coming out. On Wednesday, 8:30 Eastern Time, that's before the market open, the PPI numbers will be out, and here are some of the consensus numbers to watch out for. And then on 2 p.m. that afternoon, the latest FOMC minute will be released. And then on Thursday, the following day before the market opened at 8:30 a.m. Eastern Time, the jobless claim numbers and also the CPI numbers will be released. So here are the numbers for the consensus. Keep an eye on these consensus numbers and see how well they match up to the actual number. And if they are way off, we could expect to see some major reaction from the market. Now let's take a look at this daily chart of the SPY, the SPY. You see on the middle of the week here, it appeared to be forming a little bit of a bull flag above this weekly upper range. Then the non-farm payroll came out and it pushed the price back inside of this balance area and closed inside of the weekly range. And that hasn't happened for many weeks. Next week, upper range, the number will be between 377 and 375. And the lower range of the weekly expected move will be between 350.60 and 347. So here are the possible scenario for the upside. We're essentially looking to see will price be able to break above this high volume node at this 364.70 and see will it be able to come up to the edge of this balance area, this upper edge. And if it could break above that, then look for the price continue to move up into this upper range of the weekly expected move. And the downside scenario is for the price to break below this value area or this balance area and come down and take out the September low, which is at the 357.11, and see what it get a bounce back into this balance area. And if it doesn't get a bounce back into that balance area, then look for the price to continue to move down to the lower range of the expected move. Now, here's the level to keep an eye on. This pre-pandemic high. This is the level of 339.08. Not saying that it's going to get there, but again, as I have indicated earlier, we do have a lot of economic reports that are going to be released. And if the market going to react negatively on the extreme, then we could see the market once again get out of the 1 standard deviation area and into this 2 standard deviation of the expected move, and that could bring it down to this pre-pandemic high. So keep an eye on that number. Not saying that you're going to get there next week, but you will never know, right? This is the month of October, where it is known to be a month with treacherous sell-off. And looking at the daily chart of the QQQ, it looked like at the beginning of the week, the QQQ was getting ready to get a bounce off up toward the, maybe make its way up toward this high volume zone here. But then the non-farm payroll came out and it pushes back down and dipped below the balance area here. So right now it is below the balance area and closed underneath the upper range of the expected move and closed inside of the weekly range. So for the coming week, the upper range of the expected move is between 282 and 280. And the lower range of the expected move is between 258 and 255.50. Now here the scenario for the upside, we're basically looking for the price to see would it be able to move back into this balance area and then bounce up toward the upper range of the expected move and fill the Friday's gap. And the downside scenario is the price continue to move down and take out the September low, which is somewhere near this 267.10. And then we see it continue to move down into the lower range, and also take out the 0.618 or 61.8% retracement level. Then again, keep an eye on the pre-pandemic high at 237.47 in case the market is reacting negatively on an extreme to any of those economic report release. And here looking at the IWM. The IWM ended the week below the pandemic high and also below the 50% retracement level after having stayed above the upper range of the weekly expected move, and also ended the week back inside of the expected range here, also below the pre-pandemic high and also the 50% retracement level. Now for the coming week, the upper range of the expected move will be between 176.35 to 175.25, and the lower range of the expected move is between 162 to 160. And here the scenario for the upside, we're basically looking for the price to see we'll be able to get back above the pre-pandemic high and also above the 50% retracement and come up and fill the Friday's gap and continue to move up toward the upper range of the weekly expected move. Then on the downside is we expect the price to continue to come down and take out the June low, which is way back here, right? Take out the June low and move down toward the lower range and see would it get a bounce. And if it doesn't get a bounce and it's getting a negative reaction to any of those economic report, then we'd be watching the 618 retracement level somewhere around 152.52. Here looking at Apple, Apple broke below this balance area here, and it's getting near the recent low, which is right here. So the upper range for the coming week will be between 147.50 and 146.25. And the lower range of the weekly expected move will be between 134 and 132. So here the scenario, the upside scenario, we expect to see will price get back above this 143.15, this high volume edge here, and see would it be able to get back above it and fill the Friday's gap. And if it could fill Friday's gap, then look for a continuation move up toward the upper range of the weekly expected move. Now, the downside scenario is to watch will price break this recent low and come down to this level here, this edge, and at this 135.54, and see what it finds support and then bounces back up. If it doesn't bounce back up, then we look for a continuation move downward to take out the lower range of the weekly expected move and also the 382 retracement level. And we'll see what it get a bounce here and be watchful of this level here, the June low at 129.04. Again, if the market react extremely negative to any of those economic report, then keep an eye on these level here, these extreme level. And for Apple, basically keeping an eye on 129. And finally, looking at Tesla. Tesla did not have a good week last week. It wasn't able to find any support anywhere when it dropped back inside of this balance area. You see, it just came right down and dipped below the lower range of the weekly expected move and got pretty close to the 50% retracement level. So for the coming week, the upper range of the expected move will be between 244.20 and 239.40. And the lower range will be between 206.75 and 203.30. So here the scenario. For the upside, the scenario is to see will the price be able to stay above this 50% retracement and get a bounce back up toward the upper range of the weekly expected move. Then the downside scenario is to continue to move down and dip below the 50% retracement and into the lower range, and then make its way down to this lower edge of the balance area somewhere near the 196 area. So be careful now. Also, we be watching this extreme level, 172.78. That is the 618 retracement level. So again, if the market react very negatively to any of the economic report, we could see the price dip down close to these, if not tagging these extreme level. I'm not saying that they're going to do that, but there's always that possibility. So be prepared, at least be aware of those levels. Now let's take a look at the E-mini S&P 500 Future, this ES chart here, and see how it told us to expect the price to go below the September low for the S&P 500 cash index and the SPY, and possibly for the QQQ, the Nasdaq 100, and the Russell 2000 to follow suit. So you can see right here, this is the Globex low that was made on October the 2nd, I believe, on a Sunday evening around 8 o'clock Eastern time. And the value is 3571.75. This low doesn't really count officially in the book because it's not being made during the regular trading hour session. So when we talk about highs and lows, we talk about the regular trading hour session. So in order for this level to be official, the ES during regular trading hour session, RTH, has to come down and take out this low here, at least tag it. So we know that it will at least come down to 3571.75. So that implies the cash index of the S&P 500 will also come down to take out the September low. And if the cash index take out the September low, then in turn the SPY, the ETF of the S&P 500, will also take out the September low. And we know that the S&P 500 has a lot of this high cap tech stock in the index as the Nasdaq 100. So the Nasdaq 100 and the QQQ most likely follow suit as well. So in the coming week, the market will face with at least 3 major economic reports where it will likely have a big reaction to them. They are the PPI, CPI, and the FOMC minute. This essentially provides 3 opportunities for the market to take out the September low. Unless the Globex low from the ES is taken out, I'd be very cautious on any rip going higher. Although the market could be near a bottom, but until it has formed a bottom, stay cautious. Be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.